Good morning.
Welcome.
Thank you very much. It's great to be here.
It's
Big
a
announcement
privilege.
from the minister. That was good to see. Yeah.
It's a privilege to have you with us
Yeah.
this morning. I want to start off by first congratulating you on the progress of GFANZ. It's really come a long way. In particular, I want to congratulate you on the opening of the APAC office in Singapore yesterday. But tell me, it's no mean feat to gather 450 financial institutions who manages more than 100 trillion in assets to come together and pledge to net zero by 2050. But what do these pledges actually mean? How do we translate that into action? How does the GFANZ hope to deliver on its promise of creating a new paradigm where the financial sector can play a leading role in helping the real economy decarbonize?
Yeah. Well, first, let's be clear about what GFANZ members have committed to. So it's their own emissions, obviously, of their operations, but crucially, it's the financed emissions of the companies in their portfolio. So if it's BlackRock, it's the companies they invest in. If it's Sumitomo Mitsubishi Banking Corp, it's the companies they lend to. So all of those emissions, and their commitment is, of course, that those emissions are net zero by 2050. That's sort of table stakes. But the key thing is that it is the fair share of the emissions reductions by 2030. And then as well, if you're a bank, you will have a 5-year decarbonization plan by sector. They're in the process of developing these. And then there's annual reporting of those emissions, starting from at the end of this year and rolling into next year. So the level of commitment is quite substantial, and it comes from the future into the present. That's how we get the real action that's there. And what we're going to see, what's happened is, of course, the major commitments were made at Glasgow. If you're a bank, you have 18 months to translate that into these decarbonization plans. If you're an asset manager, an asset owner, you translate them within a year. So for Sharm el-Sheikh, there will be a number of these actual plans that come out. So the translation of ambition into plans and action. And of course, what we all care about is capital moving to companies that have decarbonization solutions. I'll say one other thing just by way of introduction. Just alert people here that next week on June 15th, GFANZ will put out a comprehensive framework for net zero transition plans. So for financial institutions, what financial institutions want of companies, how we should wind down stranded assets in a responsible way, what sectoral pathways look like, what portfolio alignment looks like. And all that is being put out for consultations so that by the time we get to Sharm el-Sheikh, we have best practice from a private sector perspective, and we have this translation, the beginning of the translation of these broader commitments into planning and, of course, action.
So one of the, when I talk to companies about transition plans, one of the challenges that they have really is around the fact that, particularly for Asia, the transition pathways are not so clear.
Yeah.
I wonder whether that will be addressed in what
Well, this is, you kindly mentioned yesterday's announcement, and it's very significant, this Asia-Pacific regional network anchored here in Singapore, like so much, as the minister just indicated, so much of sustainable finance. And one of the roles of that network, the way we say it is, it's bringing GFANZ to Asia, but it's really bringing Asia to GFANZ. And Ravi Menon is, as I said yesterday, the busiest person in global finance. If you want something done, give it to someone who's busy, or give it to Ravi. He is chairing this advisory panel of the network, very senior advisory panel. The president of the Asian Infrastructure Bank is on the panel. Hiro Mizuno, known to many of us, UN Special Envoy, on that panel, managing director of the Asian Development Bank, and other people on this panel. And what the panel does, one of the elements of what they do, the president of ClimateWorks as well, an NGO, is to provide, as I say, Asia into GFANZ, and part of that is ensuring that those transition pathways reflect the different circumstances in this region. I mean, as we all know, this is the most important but also most diverse region in the world, and a transition pathway in Cambodia is very different than a transition pathway in Singapore. That's only natural. Now, you have to translate that high-level statement into something concrete so that finance goes at the right pace to the right places.
Yeah. As you rightly pointed out, getting Asia to net zero is critical to getting the world to net zero, given that Asia contributes to more than half of global emissions. And I think Larry also pointed out that actually in a number of the economies in Asia, there is still a significant reliance on traditional fuel sources, including fossil fuels.
Yeah.
And he alluded to the need for a just and equitable transition. I think back in 2009, the developed countries came together and said we'll pledge $100 billion of financing to help developing countries mitigate and adapt. We haven't gotten to the target yet, but even getting to the target, I think would be quite inadequate to meet the needs of the developing countries. So at some level, I was wondering, what are your thoughts around how do we get to a just and equitable transition for developing markets and for developing markets in Asia?
Yeah, well, the first thing, I mean, you're absolutely right. The commitment at Copenhagen, the 100 billion, is due as per agreement at Glasgow to be delivered next year. So this is not moving at a pace or at a scale that's necessary for the transition in the emerging and developing world. Big picture, the emerging developing world needs an extra $1 trillion a year by the latter half of this century, or sorry, this decade, latter half of this decade, in order to make that transition and to ensure that the transition is just. So that the corollary of that is we're going to need private capital to play a significant role. But in many of these economies, it's unrealistic to expect that private capital would play the exclusive role, and that means that we need to look to instruments like blended finance in order to get leverage from the limited amount of concessional capital, MDB capital, that is available so that it's most efficient. And one of the things for Sharm el-Sheikh is a focus that's taken a bit of time, quite frankly, to develop. We have called for this very clearly last November in Glasgow for an enhanced country platform approach, so-called country platform approach. There's a new acronym, I'm sorry to say, it's hard to keep all the acronyms in your head, but JETP Partnerships, Just Energy Transition Partnership, is a G7 acronym. And the idea is that initially with some of the major emerging economies in Asia, Indonesia, Vietnam is the two Asian examples, that there would be comprehensive financing packages put in place for high ambition energy transitions that would include financing of the just elements of those transitions. And of course, as you well know, I think everyone here well knows, a huge element of that is the transition off coal. A huge amount of workers in the areas and a need to accelerate that transition. This needs to be part of it. So we at GFANZ, we're not driving that process because the public money and the public interface has to do it, but we're providing significant resources in terms of expertise and personnel. And we expect, if these negotiations go well, that we will provide a significant amount of the financing in order to make this happen.
So I think you talk about the need for private capital to come in, which I totally agree with. But that cannot come in isolation. We've talked about blended finance, private-public partnership, but we don't see that really happening at scale. What does the private sector ask of governments, of multilaterals, for there to be the right risk sharing and reward sharing, for us to be able to catalyze private investment at scale to solve the financing gap that you talked about?
Yeah, so let's, I mean, this is a finance crowd, and so let's get down to the numbers. On average, public capital, or MDB capital, has crowded in, I'm going to round it up, $1 of private capital for $1 of public capital on average. It's actually slightly less than dollar for dollar. That's not the kind of leverage multiple that's going to work for the scale of the issue. So we do need new facilities, or we need to use the facilities that have been most effective in leveraging that. So think of the IFC, one of our co-sponsors, the IMPP program, which is a securitization program which uses their balance sheet much more effectively. Under your control, but something like 4-to-1 leverage that's got there. That's quite significant. And so, they are looking for, and we're looking for opportunities to expand that. I think secondly, and borrowing a bit from Larry Fink and other conversations, I think there is a need to hone in on certain macro risks, macroeconomic risks, and provide a portfolio approach. It wouldn't be an IFC approach, but the World Bank or others, potentially the IMF, in partnership, taking some of the first loss in a pool of for a pool of developing countries that would provide the bigger leverage. In addition to that, if you don't mind me going back to the JETP partnership approach, if everyone remembers what that is, you just heard it for the first time, but a country platform approach, a comprehensive approach to financing. One of the realities of that is, let's take the case of Indonesia to make it tangible. The Indonesian government intends to raise the ambition of their NDC, their climate transition plan. That will require financing, including for just transition. Some of it will be blended, some of it will be private, but the private financing for that, by definition, is transition financing. It's the type of financing that GFANZ members have committed to, and it isn't necessarily all green financing, because some of it requires the wind down of coal, some of it could be gas transition, some of it could be other elements of infrastructure. But it's part of a coherent whole, and therefore it helps unlock the transition as transition financing. And that's not explicit leverage from the public blended finance, but it's part of an overall approach that unlocks that private financing, if you follow. And then the additional thing where there's an opportunity, and Singapore has been very focused on this globally, not just for Indonesia, is in a potential to really professionalize and scale up high-integrity carbon credit markets, including for nature-based solutions, which it's hard to see, at least from where I sit, a comprehensive financing package for a high-ambition Indonesian transition that doesn't include a component of that. So there's in various ways, by working together, tackling the problem as a whole, we can get both explicit leverage in specific blended finance vehicles, and we need to do a better job on developing those vehicles and deploying them, but also implicit leverage, if I can put it that way, by having the overall package that's part of a coherent whole.
Yeah, there certainly has been an uptick in interest as well as in capital flows going to green financing. Everyone's sort of chasing green financing opportunities in some respect, but are there sufficient projects, are there sufficient opportunities of scale that delivers adequate return to private capital at this point? Temasek, together with Bain and Microsoft, actually published a Southeast Asia Green Economy report 2 days ago. And within that, they cited a few constraints or challenges to unlocking the opportunities within green finance, including the lack of sufficient incentives, inadequate understanding of the system costs, for example, because carbon price is not set at the right levels, a focus really on trying to have silver bullets to solve issues, whether it's fusion, whether it's hydrogen, etc., rather than working on improving practices, for example, in sustainable agriculture. So my question is, do you agree that these are the challenges? What other challenges do you see? And then two, where do you see the most attractive opportunities, and whether there are scale opportunities for capital to be deployed at this moment?
At this moment. Well, the first thing is, yeah, there are some impediments, and as you say, you've helped identify those and codify them in a way. I think as well, if I understand the nature of your work with, for example, with HSBC in the region, part of that is to have a consistent approach to project finance and green finance that then is replicable, scalable across the region. And that has benefits, obviously, directly for Temasek and HSBC, but it becomes a market standard that can be applied by others, and that's what we all want. We want people to crowd into the sector. And one of the things we've done at GFANZ is to take that a similar approach with something called Fast Infrastructure, again, developed in partnership with HSBC to have this broader approach. So that's the first thing. There's sort of process elements, if you will, to transactions that can be regularized and then scaled. The second is to really underscore that, and it was part of your question, there's different types of capital deployment opportunities here. And there is scale in pure clean energy, but there's also, and I think this is where you see some of the biggest opportunities, are to go to the hard-to-abate sectors and get substantial reductions in the emissions down, and on the pathway to the transition. And if I can go back to something I said at the start, which is part of what we're putting out next week, is a whole transition framework. So it's not a green framework alone, it's a transition framework. So, people can judge the opportunities relative to the pathways that the steel sector, the aviation sector, the maritime sector have to follow in order to be on the path to Paris. And in those cases, and this goes to the last part of your question, those cases are huge value opportunities because those industries tend to have lower valuation. There's less differentiation between low emitters and higher emitters at this moment. There will be much greater. And if I can just reference in a different region, in Europe, there is material multiple differentials between low and high emitters by sector across the economy. And that makes sense because there's a lot more information in Europe, and climate policy as a whole across that region is further along, not further along necessarily than Singapore, but relative to the Asian region as a whole. So all of that starts to come together to bring actually quite a large opportunity set. I will say, if I can step out for a second, and from a Brookfield perspective, we see a huge opportunity set in Asia, particularly in the hard-to-abate sectors. And from an impact perspective, that's some of the largest decarbonization.
Yeah, I think that does dovetail very nicely with the question that just came in, right? I think you at Brookfield and ourselves at Temasek don't believe that we necessarily should be divesting assets just because they have got high emissions. We need to work with companies to actually have a transition path to actually decarbonize, and that's the responsible thing to do. So one of the questions that came up, if I could just pull it up, is to say, if asset owners decarbonize by divesting to local owners who run assets without proper environmental protection, how will this help us meet net zero? And I think the answer, from my perspective, is no. But we're keen to hear from you.
Well, we have a similar, we work in partnership, and we have a similar approach to that, which is, and let me say first, from a system as a whole, we need real-world decarbonization, not portfolio decarbonization. And for an individual institution, yes, you can push the problem off your balance sheet, but that doesn't solve the issue. In fact, it may prolong the issue. And one of the things we're focused on is, look, people who are a member of institutions that are members of GFANZ are committed to decarbonization. So we have to have a system that allows them, in fact, encourages them to work with companies to get those emissions down. Now, some companies won't have plans, or some companies, this is like every aspect of investing, some companies have plans, but they're lousy at execution. And so in the end, if those companies aren't going to execute on decarbonization, it will make sense in the end to sell. But what we don't want, in fact, I'll give an extreme case, which is that we want to make the system, and we are going to make the system in a position where, in an extreme, that a pool of assets, a pension fund or an asset manager, could actually see their emissions per dollar invested go up because they've shifted out of the tech sector, which is relatively low emissions, into hard-to-abate sectors in order to get those emissions down. Now, they can see those emissions going up if they have a credible expectation that they're going to go down quite rapidly, and they'll be on the hook if they don't, because all of a sudden their progress on a transition basis will fall apart. And again, it's just the analog of going in and buying a company that's underperforming and having an expectation that you're going to, it's going to be a profitable investment. The company has to perform.
Yeah. So we've seen, obviously, geopolitics bring to the fore the importance of energy, food resilience, and security. Yeah. And we've seen commodity prices go up in the recent months. The consensus seems to be that this is going to accelerate investments in green infrastructure and green energy in the long run. But what about the short run? Are we locked into a near term where, carbon, we're going to be using a lot more fossil fuels and therefore we'll lock carbon emissions at a higher level? Does that derail the entire climate agenda because we've emitted so much in the near term?
Well, I think I'd say it this way. First, I agree with the second part, which is that in the short term, I mean, we're seeing a real-time scramble for energy, some elements of conservation, but a scramble for energy, and in virtually every case, the alternative source of energy is either neutral or higher emitting than that which is being displaced. I mean, this is a major rupture of global energy markets without question, and it ripples all the way across. So we are using up more of our carbon budget in the short term. It's making the challenge that much harder. That said, it is underscoring just how poor the existing system is. It's not fit for purpose. It's unreliable. It's inaccessible. It's unsustainable, and it's unaffordable for many households. I mean, this is a terrible system energy system we have right now. And so what's happening, and I wouldn't say it's accelerating in the long run, because it's accelerating in the near term in terms of the action. So Larry mentioned that Germany's moving to 100% renewable. Europe is tripling its wind and solar by the end of this decade. It's quadrupling its hydrogen. It is changing the permitting timeline for new clean energy projects. On average, it takes about 6 years. Now they're putting in place rules so that it takes 1 year maximum. So that's this is changing the dynamics immediately on the ground. You're seeing similar things in the United Kingdom. So in the regions that are most directly affected, policy is responding, at Singaporean speeds, if I can put it that way. At the pace of this country. That's unusual for Europe, unusual for the UK, but it's responding in a determined way. And what that's going to mean, and it's meaning in real time, that the scale of investment now is going up. Now, last point, the actual shift in the contribution starts to show up 3-5 years from now, but it is going to be a material shift in Europe. And I think as other jurisdictions are looking at this and looking at the economics of it, with that medium-term perspective, most decisions are going to fall in favor of cleaner energy, sustainable energy, because, look, being exposed to a long global supply chain with unreliable suppliers, volatile prices, that's also killing the planet doesn't make a lot of sense. And once you've built out the infrastructure, it's your wind, it's your sun, it's your hydrogen, and you go from there.
Yeah. So the clock is running down, not just from our chat, but also for the world and global climate change. But before I let you go, one last question from me around what are your priorities for COP27? I think you talked a little bit about JNEF. Did I get it right? I got it wrong.
Our priorities, so one of the things, let me say first from the Egyptian presidency, their priorities, quite rightly, is to move from summits to solutions. So, from aspiration to action, absolutely right. And it won't surprise you, a big focus on Africa and just transition. So that comes from the Egyptian priorities. From a GFANZ perspective, filling into that, we want to be in a position by COP so that we have the framework from the private sector's perspective for best practices for net zero transition plans. That's a huge shift. I mean, a few years ago, we were talking about climate disclosure. Now we're talking about actual transition plans across the whole economy. Ultimately, regulators and others will, voice their view and make adjustments, but we want to get up and running on that. So that's the first thing. Second thing, something announced on last Friday, which is a comprehensive open source global data set for emissions of companies, financial institutions, transition plans, et cetera. That process in place, and that's supported by the OECD, the UN, the IMF, and the French presidency, President Macron, and the major data providers. Third thing, JETP partnerships. we're not in control of that. We're working with governments in order to get there. But the best outcome is that we will have some of these transactions, and very importantly, these blended finance vehicles being put in place in order to do it. And then lastly, on the ground, and last but also first, on the ground is the individual members of GFANZ. Those who joined early will start to lay out by COP27 their specific strategies, their carbon footprints, what they've reduced thus far in terms of decarbonization, and set the standard to move forward from there.
Thank you, Mark. Thank you for joining us today. It's been a real privilege to have you with us. I wish you every success in our climate endeavors because the world needs it. Thank you.
Thank you very much. Thanks, everyone.